I guess I'd like to start by just saying I'm happy that O'Reilly's hosting this event, and I'm looking forward to basically having fun with equity research with you guys. I labeled it an eclectic journey, and I hope that's exactly what we take here. Just a little bit about my background before we get in is I spent I woke up this morning and actually realized about 20 years on Wall Street in and out of equity research, trading operations, and sales, thinking about sort of the problems that are faced by market participants and investors and just plain old people. You know, my own family would ask me questions when it comes along the lines about, hey, what's going on in Wall Street? Why do things look that way? And over the years, I thought about just what a funky business this is in some cases of different things that happen, especially. And now I think to the forefront, I'm sure a lot of you probably signed up and just thinking about is what's going on today with the financial crisis, and maybe wanting to hear a little about from a market participant or somebody who's been in this market, what he thinks and what's going on. So we'll take a nice survey here, a nice journey, and we'll have some fun. So the first thing I wanted to really kind of impart with you just about Wall Street in general is that sometimes the media out there actually imparts certain lessons that you can see within film. So if you're looking at this slide, I have 3 movies up here. You know, the quintessential movie in the middle about Wall Street that probably everybody knows is Wall Street, and then the other 2 on the side. One is Boiler Room, which was a film that was done that really talked about what we call in the business chop shops in that sense. Those who are bucket shops who would be out there actually spinning stocks and spinning stories and trying to get people to come in. And the last one on the other side is Trading Places, which is one of my all-time favorites, which probably taught me early on in life more about Wall Street than anything else. And I think that's pretty funny. So if you want to take away and want to have a little primer for yourself, definitely see these 3 movies, because what I think it really imparts for people is really the lessons of Wall Street. And this is my quick guide for anybody out there to really understand, is we talk about this on the street, and that's usually how we refer to Wall Street, are the terms about research and banking all the time. These are things that we think about on a regular basis. And really it comes down to sort of these 4 things, is that if you think about investing and managing money and being in that marketplace, really what you get is the concept of fear and greed. Those are really motivating factors. And I know that some of you might be laughing right now because I have the word greed there. It's greed not in the sense of being greedy to make return, but greed in the sense of for all things. Back to, if you would, for one of the movies I mentioned, the Gordon Gekko sort of soliloquy he makes about greed for knowledge, greed for life, greed for thirst, for hunger, and fear. And those are really 2 driving motivations that happen out there within this world. This idea that somebody knows something more than I do, or who is actually on the other side of a transaction. That really goes to really the second bullet point, which is markets as a contact sport. Some of you just think that we do some mindless buying and selling, and we look at prices and we transact electronically, or maybe we get on the phone and talk to somebody. But really, back to fear and greed and really imparting markets as a contact sport, once again, there's always somebody on the other side of a transaction. And anytime you're in the market and you're an equity research analyst or a participant, a sales guy, portfolio manager, that's always in the back of your mind, is that if I am making a buy, why is somebody selling? And that is one of the principal things that always drives you, which is, why is somebody taking the opposite point of view that I am in this case? And why is somebody willing to pick up that transaction? What do they know that I don't? And really, that kind of leads to the third point here, which is that generally what you're trying to do in investment is something you would do normally every day if you thought about yourselves going out and buying any item. You're always searching for a bargain, or in this case, you're searching for something that is mispriced, where you believe the value is much higher than what's actually being portrayed in the marketplace. And that, in essence, is really a snapshot of all Wall Street, if you think about this, is that we're searching on a constant basis and looking for opportunities where we think we have enough information out there that we know that assets that we want to hold are actually mispriced, and at some point they will come back into some normalcy and be priced correctly. And that could be either up or down. You may think that an asset is overpriced, and therefore you want to sell that and wait till it comes back down and buy it again and actually recoup the difference between the 2. Or the more careful situation, which we call being wrong, is buying an asset because it's underpriced in hopes that, or that you have the exact appropriate information, that the asset is going to rise in value over time. So my last bullet point here really comes back to the whole whole enchilada, as we'll say with this, which is information and price. Those are the two determinants here, is that the more information that gets exposed about a company or an instrument or a situation, the more it reflects in the price in that case. So if you can see this slide as it comes out, is when we talk about usually, or at least, as I talk to anybody who's in this business, it always comes back to me that sort of the modern foundations of investment research or the part of analysis of investment. And it comes back to a gentleman who lived in the earlier part of the 20th century, which is Benjamin Graham. Benjamin Graham is one of the real sort of deans or founders of this idea of security analysis. Back when he started on Wall Street, sort of in the right before World War I, there was no really concept of analysts. The idea was that really markets were driven by speculation and really rumor. So really what you wanted to do in a market back in those early days was find out who were the guys who were trading, what inside information they knew, and hopefully you were jockeying up and you were aligned with them and you were getting the tidbits of information that would fall to you. That's basically how most people thought about the market at that point. And really there was sort of an interesting area that was developing around Ben Graham's time, where people were clerks and statisticians. These were folks who looked more about the companies, understood the prices, could quote prices and understand more. And Ben Graham was one of those guys who actually took what I would say a more academic kind of look at this and said, there's more to this, really. And I think the big parallel here to today's markets is in some ways, and what's happening with the internet, is that Ben actually started to see is that some information was actually trustworthy. Most information that was put out there about companies was very untrustworthy. And Ben really started to understand is that there were certain places you go, whether they would be companies that were filing or certain government institutions that were collecting information, that if you spent enough careful time and study, you would find really pertinent information about a company, an industry, or a business situation that could help you understand the idea of what the company was truly worth. We call that in investing this idea of intrinsic value, or really what is the company worth outside of the fluctuations of the market, is that there is some real value to this. So really when you look at modern investing analysis and what's gone on, Ben Graham has been the guy who's put that together for most of us. He's kind of been forgotten over the years and he reemerges every once in a while. Probably the most famous Ben Graham style investor out there is Warren Buffett. And once again, I've got two of the other books up here from that are always associated with Ben Graham. The one is the more one practicing individuals from equity research all know about, which is security analysis. And the other one is really more that's accessible to more people, and I think it's coming into vogue. I looked on Amazon probably about a week ago, and I noticed it was in the top 25 in business and investing, which is the intelligent investor. And really that kind of frames out these principles ideas around value investing, intrinsic value, fundamentals, versus the factors of speculation and what's going on in the sense of what other people are saying and what's going in rumor and speculation and trying to tie into that. So a little bit about just what I think about professional money management so you can understand it, is that I try to boil professional money management in this business down to basically three questions. And there are always three questions that I think about as part of this business. They're the what, the why, and the how, really, of investing in professional money management. And it always comes down to what products do I buy? Do I buy equities, fixed income, commodities, or currencies? Why, really, the principal question for me is why should I buy these things? And usually that boils down to, once again, what I said before, which is this idea that you're determining some type of value, or you have some type of relative measure you have, and you think there's a mispricing in the marketplace as a whole on the exchanges for this, and you're looking to take advantage of that situation. So usually your reasons and your reasoning around that is why that is happening. And then the last part is how should I transact? Should I pick up the phone if I'm a retail investor and call my broker? Should I go online? Well, institutions, that is the bigger entities that are out there, transact very similarly, is that they have ideas about how they split their orders up and trade them and execute them, as well as machine by machines, or algorithms in some cases, if they're doing a strategy that's built on a way to look at the market mathematically and figure out a mispricing or a relative value within the market that they want to take. Or sometimes they physically call, in this case, a sales organization or a trader and make an order that way. So there's always this idea about, for me, the what, the why, and the how of how you, basically of professional money management. But the commonality for these kind of roles, and I put down really the classic roles on Wall Street that always have been there now, are research, sales, and trading, which is research is the arm, of course, who's concentrated on the why. Sales is always concentrated on the what, which is what products am I going to talk to about clients, and trading is about the physical execution. But really, the things that they concentrate and really are common to all this is the idea of news, idea generation, what sources are out there that I can look to help me with that, and really information retrieval. So once again, back to that fourth bullet I had on a previous slide, information equals price, and it's very relevant in this case of all three of these areas. So just to label out once again, if you look at the client functions that are there, and this is just a different look at sort of the slide I had before, but expanding out, is there are really two sides on Wall Street. There's a buy side and a sell side, and they're determined that given on basically what's going on in the sense of who's pitching and who's cashing. So the sell side pitches ideas and pitches transactions to the buy side, and the buy side you can think of in the classic sense as somebody like a Fidelity, in this case, who has a large range of mutual funds, or a PIMCO, who does the same on the fixed income side, or even what we call the alternative hedge fund world, where you have folks like D.E. Shaw or SAC or even Steel Partners. Those are the folks who are actually out there trading an account and basically managing money, in the sense, for clients. And then the folks on the sell side who you would see are the folks who really do the transactional piece as well as provide research. So in the classical sense of Wall Street, those are the two areas that normally that we talk about. We always talk about the buy side and the sell side. And really there are applicable functions on either organization, and except for really the sales side on the buy side, which is really about capital raising, the other sort of parallels, the other two organizations, really research and trading, are very similar in the sense that one is more about pitching ideas to the buy side, the sell side that is, they're pitching ideas on the research venue to the buy side, and they're having client relationships in this case where they're talking back and forth with a portfolio manager and analyst on the buy side, as well as on the trading piece, which is you have this idea that everybody is into idea generation, execution, and thinking about what's going on in the marketplace at that time in order to make a transaction. So just a little bit about just trends, and then this will make sense as we get further into the presentation here. But what I see lately as trends that are going on between the buy side and sell side are just a few things. Is that the first one here, I don't know if everybody's familiar with, but there seems to be now at least more to the forefront is an exchange-traded funds or ETFs. And that's basically where you take a basket of securities and actually create, in this case, a mini index that you can use in certain ways. So you can think of that as that maybe I don't want to buy the S&P 500. I would just like to buy only an index that tracks technology stocks. Or maybe I want to buy an ETF that only does, that simulates what it would be like if I wanted to invest in Taiwan. And what we're finding out lately, at least in industry-wide trends, is that that's going, and that's pretty big, is that both people are looking as a way to hedge, which is to kind of look at their downside risk and use an instrument to basically allay some of that risk, or as a direct investment. The other thing that I see out here, which is really, comes to the forefront when later we talk about the web and equity research, is that given what's happened about equity research and coverage from the sell side, is coverage is something we define as basically what companies a sell-side firm will actually cover and analysis would do. So in this case, over the years, it's been declining, and I think that's directly attributable to what happened after the sort of the first bubble that burst in the technology side, which a lot of you may have been familiar with. It's just the fact that once what we know in the industry is the research settlement that was sponsored by Elliott Spitzer, basically is investment banking, which is another part of a large institution, used to cover a lot of the costs for research. That changed after the research settlement, and really research organizations were challenged in figuring out how to pay for research. It's, there's a cost to maintaining coverage and analysts and having people write about companies. It's a very expensive proposition to do. So once the banking revenues on that side could not be applied to pay for analysts, most sell-side organizations had to figure out at that point how to pay for research. So consequently what they did was they started the first wave of sort of layoffs within the research side, and we saw top analysts in this case actually go and sit over in the buy side. And that kind of happened because really the buy side had a need to still be involved in those companies and be able to get information, and the attractive proposition of being paid for that really went for those top analysts to go to the buy side. By the same token, what happened on the sell side was that there was more closely alignment by research to its traditional side, which was trading. Since trading executions or commissions were paid for in essence of research. So we saw probably right after the research settlement in that time of 2001 is a decline in coverage and a decline in the expense that was paid by major firms to support research. So what happened also as part of that is that as part of the settlement is that I'd say they're not 9 anymore, but the top 9 investment banks are out there in this business had to actually go out and basically fund third-party research to basically hold in concert with the research they wrote. So if you wrote something on Intel, you had to have an independent third party as well be available to your client base so they can read as part of somebody else's opinion on Intel. So that was another thing that happened is the third-party research started to get funded, and it was part of the settlement in this case that basically every investment bank who had sell-side research had to go out and sort of get a third party to supplement their research with. The other thing that's interesting right now in some cases is that you're seeing it more and more every day is that usually when the market is in a normal pattern, certain things fall in a way and that research is kind of at least a little bit more sort of commoditized in that sense because everybody is watching it. So I would say is that right now improbable events are very much more probable, and Mr. Market is sort of behaving very erratically more so than usual. This is one of those things where we see typically when you probably look if you're not an industry participant, but when you see on the news how we have these wide point swings in the S&P or Dow Jones, normally we don't have such volatility or wide point swings like that. But since the problems with Bear Stearns that appeared in March of 2007 and later on with Lehman Brothers in September of 2008, we have had nothing but volatility. And I think we've had some calming down in the last, but that's actually caused some real big problems out there because from the sense of trying to keep a picture on equity prices and any trends that are out there, or any EPS numbers that you have, the earnings per share, or some of the estimates you put together, this kind of wide springs in price really drive you crazy, and some of the issues around that. Also, I just briefly touched on is that another industry-wide trend is just the rise of what I would call independent experts and the professional blogger. I think in the last 5 years or so, I have seen just more and more commentary and analysis coming outside of the normal traditional world of equity research from sell side. So you're getting third parties who are aggregating opinion, or even third parties who are creating original product, and it's being consumed by what I would call the buy side, or the traditional buy side. The other thing that's out there is just news, and I think this is something that always hits home to me on a regular basis. News is everywhere. It's abundant, and in many cases, it's free. And news, to me, is a big part of research and part of the equity research game and part of Wall Street as a whole. Once again, if I go back to information equaling price, a piece of news at a certain time will definitely affect the outcome, especially on exposure to certain risk or certain tendencies that are out there. I think we all saw over the last couple of days, it's probably been beaten like a dead horse, which is Steve Jobs and the announcement of his health and the effect on Apple stock and what that means for the future. One thing you have to understand about companies and about the equity research game is that it's not sometimes about the now, it's about the future, and basically the speculation on future events, or in this case future profitability, and the ideas of how that's going to impact revenue and company earnings at that point. So always, anytime a new piece of information enters into the fold, it always changes sort of that picture of a firm and what's happening with its prospects. And the last two, I'll just pretty briefly, is that just in this business alone, it's something that I find is changing every day, which is primary research. And this goes back because of coverage declining and less large firms being able to support a real large research operation. Is anybody who is on the investment buy side right now is really challenged to do their own primary research. They've already been doing it, but they have to do more of it. And with that is if you understand this business a little, and what I'll try to maybe impart to you guys is that for the most part is how people get paid in the sense of Wall Street, especially if you're a large institution, has really changed. So when we do a transaction, in this case, if you're a buy-side participant, you do a transaction with a big Wall Street firm, chances are you have, just like an individual would, you have a broker. In this case, you have a very large institution that's supporting you at one of these firms called the prime broker. And that prime broker basically helps you with a couple things. Is that if you're a fund, they can lend you money. They can help you by, lending stocks in the case of wanting to be short. They do hold on, and of course there are fees charged for that. One of the big things they do is they actually provide research as part of the transaction, and you pay more for that transaction. So in the case of you may be paying, something like 4 or 5 cents per share to actually get the advantages of having that prime broker be your prime broker. And that means that it's full service, so you get the benefits of research from the prime broker. Well, what's happened over the years is that because that research in some cases is so commoditized or it's fallen in value, the clients have basically said, I'm spending a lot of money with you on research. I'd like to be able to, as part of this, pay for other third parties through my commissions. And that's what we call commission sharing arrangements, or CSAs, where buy-side firms will actually go out and say, I pay a lot to you in commission dollars. I really would love to, in this case, take a portion of that and pay for third-party research services and have it come out of my commission pool that I spend with you. And that's an accepted practice. So you've got two things going on. Is you've got primary research that needs to be done by somebody who's on the buy side, and you've got, in this case, a bankload of commissions that are out there that they're doing with their prime broker. And really that's helped to kind of fund this third-party thing that's going on within research of other providers. And the last thing that I see is that because of what's happening, commoditization of information, is everybody who is in the research game, whether buy side or sell side, is looking for their own proprietary customized data sets. Is they're trying to figure out proxies for other numbers that are out there, other media established consensus numbers, and that's a big thing that's on Wall Street is about consensus. It's like, what does the market think? So in a lot of cases, you'll have firms or analysts or in some cases technologists who are a big part of this will go out and figure out, can I proxy for something and have a pretty good indicator by pulling data from somewhere, whether it's proprietary data or it's whether it's data now that I actually collect from the internet and I put together. So as this slide builds, this is just a real quick bullet. You can take a look. Basically the bottom line of this bullet is my buddy Bill Janeway, who's Vice Chair at Warburg Pincus, kind of give a little historical perspective, and this has to do about the cost of what it was to trade a share on the NYSE and basically what happened over the 70s and 80s and the position that we're in today. But the bottom takeaway here really is that, once again, is that just proprietary research is shifting to the folks who are doing investment. They have to do more of it. They didn't do as much in the past, and they're doing a lot more for it. In the other case, which we've seen, which to some degree is that the BD stands for broker-dealers, which is another way to say sell-side institutions, because that's what they do. They brokerage, and they're also primary dealers for securities. In this case, is that because of this, and they have their own proprietary trading or other things, they're trading against their clients by making markets in certain things and actually transacting and having their own private book or proprietary book of business. So this is just my fun slide out here that I always enjoy, which is just over the years I start to see as the internet has emerged and who actually uses it and what's happening, there's a comfort with the net that comes in now. So I don't know if somebody will probably recognize the photo on the left of the portfolio managers. That's actually from WAMU, which is now part of JP Morgan. That's the bankers that are always in the commercial on WAMU. And of course on the right is the young, fresh minds who are the associates and analysts in the business who do most of the work. And really, what that is down there is that's a quote from Mike Lynch, who's at Merrill Lynch, and he runs sort of that global commission side, which is really the transaction side. And really, that's the two things I want to take away are the underlying parts, which is just the behavior has changed of your equity analysts, whether buy side or sell side, is that they're going to the internet much more often. They're turning there because that's been a source for them as just being an early adopter and being young. And really, that's where they're going. So the internet is becoming a larger and larger part of basically the research picture of how you do things. So what is equity research today? Basically, I kind of said this before, is that it's the expectations business. So what I have here is a little clip from Yahoo here, Yahoo Finance. And really, the equity research business on the sell side has become very much a shorthand. And this is more to the retail side than it is to the institution side. Retail being, the retail investor, institutions being, in this case, the folks that I mentioned before, like a D.E. Shaw, or in cases like a Fidelity or others, is for the retail side, you think about, you get a recommendation from a broker, you should buy this, you should sell this, you should do that. And really, it's consensus. It comes down to the expectation of consensus of what's out there from many equity research components on the retail side. But For institutions, it's never really about just buy, sell, and hold. In fact, I would say institutions over the years in working with them have never, for the most part, really thought about what the buy and sell side say. I'm sorry, what the sell side say about buy, hold. It's really more has to do with the analysis and the catalyst. And what we talk about as being catalyst in this case is what's going to move that equity, or what piece of information out there is what we aren't taking into account that's important that we should be looking at more closely. So really, it still is the expectation business, but it's about in the process of the company. So it's not just buy, sell, and hold, or strong buy, or above average. It really comes down to, for institutions, around, hey, here's somebody, and here's what they've written. Here are the 3 or 4 bullet points that I'm taking away about what's important about that company, so I can do my analysis and go further. But I would say, for the most part, and this is one of the problems with sell side, at least on the retail side, is that it still denigrates this idea of, buy, sell, hold, and that's what the game has become. And that's pretty much a commodity in my book. So expectations, of course, becomes consensus, and it's propagated by, if you look, I have on this slide, I have all the people who kind of propagate this to one degree or another. I have an SEC bullet up there because they propagate it a different way by making now the information available to everybody. But really, is you have a whole bunch of analysts who are, in this case, or I should say, less analysts than you used to probably about 10 years ago. Getting out there, putting out consensus estimates, and the market kind of figures out it's okay. And this is if the market was running normal. All right, somebody said the average is 45 cents a share for this quarter that's coming up. If they beat the expectations, and the idea was that they wouldn't beat expectations, chances are you're going to get a positive increase in the stock. If they fall below expectations, you're going to get a decrease in the stock, a negative on the stock. So that's basically been the game to some degree that we've seen over the years where folks are looking. That's the day-to-day kind of market fluctuation that goes on within this business. Now, what's happened? So I just described probably the last, I'd say, maybe 50 years of equity research and really what's going on in this business is in that case. What's really changed, and I have, of course, appropriately enough, David Bowie up there because I think that's how I think about it. If you ask most market participants, they'd be like, yeah, change is right, is they're being hit on a lot of bounds. And really what's happened is, in this case, because of the credit crisis and other stuff, and just the emergence of a few things that have happened because of the Internet. So the first thing I'd like to point to you here is just, as it paints, this is a quote that I saw from James Enoch, and it appeared on Giga Ohm. And bottom line, the highlighted words here are really what I like to just point out to you. Competition, uses different tools, mind share is growing, your client base wakes up and doesn't want your research. That's pretty scary if you're sitting in you're actually pitching ideas all day long as a sell-side guy. The fact is that there are third parties that are emerging, and there's data that can be gathered by my buy-side firm where they really don't need to talk to me anymore, or they talk to me much less, which means I probably don't get paid as much because they're not talking to me and I don't have an influence in the transaction or where this is going from. And that's really what I see is starting to change, that the abundance of information that's actually outside of a normal traditional sell-side institution is growing. And some of it is horrible, and some of it is really good, and in cases of some of it is there to be discovered, where it's actual data and somebody comes along and actually puts 2 or 3 elements together and creates a new type of data that is actually predictive, or in this case a proxy for some other measure that's out there. And that's what I find is very powerful right now about what's going on with the Internet, is that it allows you that access. And there's a couple of reasons for that. I think one of the big ones is just thanks to places like TypePad, Blogger, and others, is that the cost for somebody to distribute an idea is very, very low. Today, if you were somebody who was in this market and had great ideas and understood research and understood a sector, you could probably put up your own shingle, and if you want, you can go one of 2 ways. Because the Internet allows it, is you can go to a wide distribution and get on the Internet and put research out, or you can go to a smaller distribution, have a couple of proprietary clients, and use the Internet once again to reach them on a regular basis. And really the cost in this case to compete with a big, large organization, especially if you already are a name brand, is very low. And I've just seen that start to happen more and more as analysts or top name analysts are shed from sell-side institutions. it's very easy for them to think about going on their own and actually building a client base, in this case, and getting paid for it. In fact, if I go back to commission sharing, which I mentioned before, if you take a top analyst who's out there, if he winds up getting 20 clients and those clients transact with a prime broker, chances are he can have commissions directed to him and make a pretty good living and support some people. So the other thing that I've seen just out there, which we probably all know, which makes things, is that thanks to Google, in this case, finding unstructured information and semi-structured information is just so easy. It's really kind of one of the things you think about that's going on about in this business, what an analyst provides. It's usually for a client, it's access and getting information and putting together and packaging it over to the client, whether it's a research report or other things. When I look about the tools that are out there, and it's not just Google alone, it's when you think about stuff like, and I have some slides later that show Yahoo Pipes and other things, you can think of this world where you're pulling things together and mashing things up and actually have a way to create new items and new data and new statistics on top of that. So to me, I use, like if I think about the tools that I use that I'll show later on, I was doing mashups and other things that were coming along for quite some time, for the last 3 or 4 years in a way, whether I was using, for my own case, Perl and doing some things and putting it together, or whether we were just ripping data and putting it into a spreadsheet and doing some simple charts and pulling 1 or 2 items together from other places. I'm sorry, I just got an interesting question I saw about traditional analysts having access to management. One of the things that's actually happened is that access to management's kind of been, I think, over the years in some ways overrated, especially with Regulation FD, which is fair disclosure, is that more companies are very fearful about what they disclose and what they not disclose. So basically, if you can watch a lot of the news and the business channels, you can get a lot of what management's saying. Now, obviously, there are some conversations that always take place outside that, but I think in some cases, even the equity research game, it's kind of that part's been overblown about the access to management. That's kind of really fallen off. The key that's happening now in the equity research game is trying to find people who work with the company, who may not work there any longer, and get some insight about operations and everything's going on. That's where services like Gerson Lehm or Coleman Research are really coming into play. And so the key that you see out there is that analysts, whether they be buy-side or sell-side, are trying to find people who are actually in the industry to impart certain knowledge in that space for them. So I just happened to see that question. I thought that was pretty cool. I think that's from Dominic Jones originally. As I go forward, what else has changed? Some of you may be giggling right now when you see this slide. I happen to be at Monitor 110 running product for about a year, and this was the slide that we had out there. I think just the picture of how information enters the market, in this case, has really changed. Before there was a very limited set of how things got in there into the mainstream media, and that was basically journalists. Once again, because of publishing on the internet and how the platform has gone, and you've got all types of people that are publishing. There, obviously, because it's the internet, and we all know that, there are wackos who publish, and then there are also, in this case, folks who have personal experience, who may be in that industry, who may have run products for 15 or 20 years, who are also blogging and putting things out as experts in this case. Obviously, you have to evaluate them, cultivate them, use them as a source in this case, and really figure out who they are. But they start to enter in the conversation and pick up. If you look at Fox Business or CNBC, you'll see on a regular basis a lot of these independent people who are actually, in this case, experts or bloggers who wind up being on, comporting as being experts on something. And in some cases they are, in some cases they aren't. But I think they've entered into the conversation. So I see another question in here that I think Vikram has, just about Bloomberg. So if I look at this real quick, so do I foresee the Bloomberg technology going mainstream? Well, I think there are two things, right? So Bloomberg, if you look at in general, one of the greatest things about Bloomberg is that the network that it entails of contacts. So if you look at Bloomberg in a lot of ways was LinkedIn before LinkedIn was there. Is that one of the greatest things that used to happen in this business is that I could reach somebody in the buy side or sell side because they were on Bloomberg, and it was sort of a closed network in that sense. So it allowed me basically to know who my industry was, and I could get to them. In fact, there got to be a point when nobody said, on Bloomberg, you never really said, I'll email you or something like that, you always said, I'll Bloomberg you. It got to be very much like Kleenex in that sense, is I'll Bloomberg message you on those items or whatever. So when you have an area like that where those people together, that was very powerful, the network effects of that. Obviously, we've seen other open sort of or competing interests that come in like LinkedIn, but LinkedIn in this case doesn't also have the fact that it has a lot of this information that's bundled together. So one of the things that Bloomberg did pretty quickly on was the fact that the value of the information is early on. If you didn't have Bloomberg, you're outside. So it has this positive effect of, well, if my friend is using it, he's a competitor to me, and I'm not using it, chances are I have to spend the money to use it because I don't want to be outside the loop. So Bloomberg has built the fact as a de facto standard for a lot of the buy-side businesses that they have to be on it, they have to have the information because basically their competitor has it. And if they don't, they're going to feel outside the loop. I think Bloomberg, though, from what I can tell and see, is looking at what's going on in the alternative space and trying to figure out how to enter in that, because news does come from, or at least Insight and others as third parties, and I'm sure they're trying to figure out how to include that in their platform at some point. They just have to, because they're just too all over the information space not to. So I hope that answers in that case. I see, what about Reuters? I think everybody right now has sort of that issue and that challenge, is how to go forward in this world where information that you had maybe in a platform that was proprietary, there's other information that's very similar, in some cases the same types of people that are out there creating that content in an open platform. And that's going to be a challenge about this closed and open source world, where people have to figure out how, as a company, they manage through that. I think there are ways you can do that, and it'll be the interesting part of the next couple of years as a challenge that goes forward. So the next slide I have here is, once again, it's just a quick thing, and it really goes to the fact of, if you looked at just the news business alone, and especially political information where it happened first, is, a guy like Matt Drudge, how did that happen, right? So, and how did he get such influence? So the only question I can say is, one is he had great stories, he had hot content at the time that was salacious, if you think about the scandal that was brought out. But really, the fact is that he had, for me, is he had a low-cost platform that he could publish on. It was quick and easy. He had opinions that were out there. He was pointing to news. And really what happened is that NewsDesk discovered that this was a great way to get interesting cutting-edge stories that are out there, and they wound up basically getting into the conversation. So this is the poster boy in some cases, whether this is not about his content either way, but it's just as a operating model. He's the poster boy for a small organization. I think, Drudge is probably 3 or 4 people right now who do all this stuff, maybe a little bit more, but a small organization that can compete and provide, value in this case, much more so than a larger corporation. So once again, this isn't just a quick slide just about news and where news is coming from, and this goes back to that of who's influencing, and journalists nowadays, and if you think about journalists, especially in the financial context, is journalists basically are helping to make consensus by the stories that they bring out. Because something hits a Reuters or a Dow Jones or even a Bloomberg terminal in that case as a piece of news, that's a big deal, right? The fact that it got on there in the first place and that either one of those organizations put it out there makes the market pay attention, whether it comes on the TV or it comes on the actual screen. So this I always find interesting, is that journalists, at least in this case, are tapping into ideas from the alternative world. They're getting it from the web, right? In some cases, they find interesting things, they become further stories, and it goes both ways, right? Because if you look at what's going on in the web world, is they're going out and they're pulling stories from the journalist side, and they're actually adding pieces to it, or they're reposting, or they're taking a new take on that. And that helps to, at least the idea generation that I always see, that we on the Wall Street side are looking for. Right, I agree with Richard right there, who just wrote, is Drudge and these reporters don't need to rewrite, they just need to get attention. That is the key, as it's always been, at least in anything that's happening within the news game, whether it be financial or others, is that if you have a large distribution platform that's out there and the story gets out, whether they're right or not sometimes doesn't matter. It's the fact that the story is picked up over multiple channels and gets out there. A lot of times that happens with businesses. I think we saw that with CNN's experiment with iReports on, once again, not to bring up Steve Jobs, but the story about the fact is that Steve Jobs had a heart attack and was carried out in a stretcher from his home, and that was reported on iReports. That kind of sent the stock, way down until somebody actually came out and put that through. So, it's the exposure and the distribution mean a lot in this case about news and how people. You have to understand there are a lot of organizations that trade off the events of news whether it be programmatically or even just the fact of it's much harder to do, but at least in the case of doing it manually. So there are organizations right now that are looking at basically trading off some kind of metadata, trading off the content of how news is coming. So an event like news or earnings or impactful events on management changes are being picked up automatically. Yeah, buy on rumors, sell the news. That's definitely that's the old Wall Street adage. You can go back to quite a few of the movies that I mentioned over there, and you'll find that in there. So what hasn't changed in the world? Still, these are still core sources. Like when I used to get up early in the morning and go to work, whether I was taking the ferry or the train or something like that, this is how I prepared my day. I probably read the Wall Street Journal. I looked at FT. Throughout the day, I'm getting information from Bloomberg, Dow Jones, and Reuters, and then, I'm getting updated once again by CNBC. That was kind of, I'd say circa, 10, 15 years ago. That's kind of how I and every other participant, basically prepared for a market day, and then I would read some research that was out there. I'd probably get some market commentary that was going on in the trading floor, hearing banter back and forth about what the latest indications or latest rumors or what clients were doing in that case. That was my day. That's how you prepared. Nowadays, wow, it's just proliferated and the stuff that I look at or I have to be prepared for, and these are just, some of the sources. There are plenty more. I've got Google searches and alerts that are out there. In that case, it's pulling data. I've got my stuff in pipes that's feeding other things. I'm looking at Technorati when I see stuff to see as commentary goes on. The big block in the middle, RSS, is the way I kind of keep, on top of the world. Wikipedia, I mean, you're finding all these different things as well as some of the vendor products that are out there that I think have changed. And, if I'm doing channel checking, say I'm looking at a consumer product, and a lot of times what we do is we check the channel, we try to figure out something may be selling or prices, and we're looking in aggregate, and we may write some things to actually pull data, is I'm going to Amazon or eBay, and I'm trying to figure out, what's out there, what's hot. That's a lot of times, organizations do that on a periodic basis when they're trying to gauge or look at revenue performance. So somebody wrote a question just about filters and noise. Yeah, that's where you really have to come in, and I think that's one of the interesting problems about being in this world, using the internet, is that there's just tons and tons of information. How do you know what's good? How do you want to look at? And I think that really comes into a couple things, and I have some slides that show kind of how I handle or how I do it. One of the things I use a lot, though, is because of so much RSS data, is I use Yahoo Pipes quite a lot. And I'm using Yahoo Pipes in the sense of where I'm looking at the XML data and I'm trying to figure out on the things that I'm interested in how to pick apart some of my relevant themes that I'm looking at. So for me, it always starts when I think about a company or investment, I'm thinking about what the current catalyst, what issues I may be interested in, and then I'm creating a pipe or I'm creating some kind of parsing structure that's going after as news or other information is coming in, and that kind of sets this tone for me, and I create these sort of widgets that fit in a framework, and I'll show a screenshot of that. So let me just get to that in some place. Obviously, you've got all the things that are going on. Is that there's plenty of hype in this space. Web 2.0. I think the key is that I'm glad there is a Web 2.0 because people have made the effort to make data very much accessible to me, so I can do my own stuff. And I think that's the other key. There's a lot of do-it-yourself out there, and the fact is that Web 2.0 came along and made data malleable and made a lot of these things easy to work with and made people want to be able to contribute to the community. They have maybe different motives than I do. But because they're contributing, I get the advantage of that in that case. And I think a lot of folks on the research game feel the same way. The fact is that if you look at, the classic, once again, not to bring up Apple, but they're such a great poster boy for a lot of this stuff. There are probably about, I would say 35 unbelievably good sources that are covering Apple from the sense of alternative media. When you think about Mac Insider, and some of the others that are out there, Apple Bloomers, pretty much you've got about 35 sources and more eyeballs out there in the Apple world who are watching every little thing that goes on. So if I were to try and cover that, that would be tough because there are other people out there trying to figure out what Apple's doing with products and everything. It makes my life a little bit easier. Now, everything isn't covered to the degree of Apple, but I find is that there are always enthusiasts who are out there who are finding out elements about product and other things that are at least exposing it for somebody like me who can then drill in that further. So that's one of the other pieces of what's happened with the web, in that case, and equity research, or research in general. So once again, this is kind of the mental model that I use about relationships. So I always think about what's publicly available, and then how does that, with information that I add, become investable information. Really, that's where I go with this, is I look at this from a sense of, like most people in the business are trying to look at, is that for me, information can be out there, but that doesn't mean it's investable. And what I mean investable is it doesn't mean that I think it's a piece of information that, if added to the picture, tells me something more about, once again, that asset pricing. Does it get to the point where, is that, let's say, a perfect case in point is, do I find two pieces of data that I marry from, worldwide and looking at Amazon? I get some maybe for a product that I'm looking at or a product area. If I take the data from 3 different Amazon sites globally and I put it together, I start to get a picture maybe of what I think that might be selling, of where it's in the top sellers. And then I marry it with some other data that I have that might be proprietary. I put the two together and I have a different metric. And maybe that metric is when I look at my peers may be out there and saying, this company, which is principally relying on 3 or 4 products, look at revenue at this end, and they're all kind of consensus around, some number, and yet when I do my model, I actually say, wow, they're way off, these guys. In this case, I'm looking at this data, and I have an indicator, and really what I've got is a piece of investable information. At that point, I'm saying to myself, okay, is that the part of where I'm really confident in this? What measures do I need? And when I go from there. So there's an interesting question came up about macro, just in this case. So, there's always this idea about, the larger economy as it goes into companies. So right now, just in the effect of the larger economy is having an overhang effect right now on the overall market, right? If you think about the tenet of the market in itself, and what happens is, today is the story right now is about financials, banks, the TARPs, collapse, credit crisis. Individual company pictures are having a hard time. If they do, it's usually on the downside. So in this case, I look at that probably is, if I go back to my Ben Graham kind of hat, as being maybe a net positive, which is Mr. Market is pretty much way out of whack. Nobody's really talking about companies right now, and the chances are is that companies are being unduly knocked down. The optimal question is which ones, and actually have some real intrinsic value that you start looking at. And the way you would do that in that case is you'd start trying to figure out what data and proxies are out there for you that you can start accumulating, take a look, that would give you an indication of what the market may not be aware of or not looking at or not interested in this point. At some point, what you have to wait for, though, is that the market comes back to some level of normalcy. Over time, that's going to happen, and that you're positioned in that case. So when I look in the concept of macro right now, at least in this case, is that right now it's all macro. Macro is having a tremendous effect right now on markets as a whole, but individual companies are being swept aside in this case. That's why if you look at the reliance on not really, what I said before about a trend about ETFs, ETFs allow you to play a sector. So instead of playing an individual stock and worrying about the proclivities of that one stock, you can basically look at this from a sector perspective and say, you know what, I'm looking right now, and I think pharma, in contrast to everything else, might be a really good sector. Let me, in this case, find some data around pharma, and maybe what I want to do is position myself and actually buy into an ETF that actually takes into account of pharma. So once again, just key technologies I think are out there that are now part of the new picture of equity research in the web age. Content tagging, and I'll show some of that. RSS, to me, RSS is sort of this wonderful godsend of, yes, there is information overload, but, if you know how to carefully structure yourself in RSS and be able to do things with, parsing and types and other filters that are out there, like 8RSS and other services like that, you can really do some cool stuff and have your own little, triggered kind of views on the world. Ajax, right? That's another big thing, just this idea of Ajax and what's going on with JavaScript and XML to make things sort of look different as well as content. And then, as somebody mentioned before, just widgets and mashups. Being able to create these special purpose. 8RSS is a service that just came up. That if you take a look and do a search on the web, it's got the company that's out there that actually has a service that does some filtering and parsing for you for your content. Just once again, back to this widgets and mashups, you can think about is maybe you're looking at a certain sector or a certain company and you want to create a specific widget or a mashup to look at the data and what's information out there. You can do that nowadays. You can create your own little custom kind of view on the world. And once again, I think just the other key is just feed readers in general have just, exploded on Wall Street. I mean, it was one of the things that I taught a lot of analysts about, and, a lot of analysts did know, but as well as clients, is just reader applications and how you can collect information from your normal sources this way. And so to me, these things are making encroachments on a regular daily basis just into Wall Street. What else is going on as the screen paints here is I think what I'm finding is, once again, is we're seeing more and more of a dialogue that goes on between mainstream sources and their counterparts that are out there, as well as just looking at information as in an organization sense. So how you organize, how you display, how you bring information forward is really coming more to the forefront. And there's a dialogue. There's back to RSS is it reminds me of the Sixth Sense, right? Is everywhere I look now, even on mainstream publications, I see RSS feeds everywhere. Whether they're pointing to them, whether they have their own feeds, whether they have special customized feeds. At that point, it's just incredible that the alternative sort of Web 2.0 kind of is bleeding into now mainstream sources of news that I see on a regular basis, and I'm able to take advantage of that and use it in different ways. So let's just say I wanted to grab company news from the Wall Street Journal, or I wanted to I had an idea just looking at the editorial page. I mean, I wrote about this I think once before. On O'Reilly, I wrote myself maybe about 7 or 8 months ago. I wrote myself just a little widget to go out and get myself from the major papers out there every time there was an editorial or a letter to the editor about oil and drilling. That's an interesting little thing where you can make a survey pretty quickly. You get them as they come in, and really you can kind of chart to yourself is like, hey, how many editorials were in the 6 or 7 or 20 major papers that I have about this topic, that I know is going to have an impact, on certain sectors of the market. As I see the amount of editorials ramp up, I know that it's a hot topic, and I should probably be watching all the news on this, especially if Congress is talking about it. So there's all types of things that you can do, and I think that's afforded to us because of what's happened with RSS and the embracing of RSS by mainstream media. And then once again, is back to this dialogue. There's a dialogue between sources, and you can follow the story. This was a while back, and it was kind of fun, which is about I thought with iTunes files and media files available. There was a rumor that I saw on the unofficial Apple weblog, and then I saw pretty quickly the news had something, and then I think it was about maybe a week later it appeared in Business Week. So once again, and they were kind of quoting each other in this about who had it and who said what. And to me, that goes back to just it's once again, it's a dialogue that's going out there where journalists are part of this. They're looking at their counterparts on the alternative media side. In some cases, who might have been journalists themselves. That content is being pulled through to a mainstream paper. It's this interesting world where you're crossing bounds on both sides. So what I was talking about sources and models. This is the kind of thing that a lot of people are really figuring out to do, and I see it. And you see services out there like Connotate, which is a service that the buy side uses to be able to create agents to rip pages for yourself to find data items. There's the open source alternatives that are out there like Kapow and Dapper and others. But really the concept is here is that I see stuff on the web on a large part where people are giving me information. Stock twits, I see that coming up. That's a different part, just in this conversation stream that I see about Twitter and stock twits. That I'll get to later. I'll talk about on the social media aspect. But this idea of being able to get data from multiple places and put it together and actually feed, if you take a look, that's a spreadsheet model, to feed into a spreadsheet model and do some benchmarking. So this was an example I put up, on O'Reilly, and it was something that I kind of put up and worked with some of the analysts at Bear Stearns when I was there, which is ideas like, hey, these are interesting indicators. People are doing out and doing the hard lifting of collecting work or doing work out there for us. Why don't we take a look and see, how predictive it might be, or if it's an indicator for something and does it give us? And the reason was this, is that NPD data, I don't know if you're familiar, in the product tracking world for software, NPD really collects a lot of scan data and a lot of data that's out there. They collect on a monthly basis. It takes about, I think, for the month you get it like 2 or 3 weeks later. In this case, when the month actual closes. There were sources on the internet that actually, whether you believe them or not, and that's the case, they have establishing credibility of sorts, which you always have to do. But you could basically get a pretty good indicator of what something is selling, and then you can benchmark it with numbers that you have. Or you can go out to Amazon and see where it ranks and kind of come up with a model and figure out, if something appears in this product category within the top 20, that might translate to X number of units sold. So really, I kind of worked this out and did a quick little model and said, it looks really interesting here. But there was a certain title by a company called THQ, which on the earnings call, it happened to be in this case, it was going to be the major title for about 2 quarters. So it was going to have the most impact on earnings. And I looked at all the analyst models that are out there, and everybody had a revenue plan. And usually what we do in the business is we take a comparable. So the company was saying, hey, this title, which happened to be Ratatouille, because the movie was coming out and was out already, it's going to sell, all right, the comp you can think about is Cars. Now, the 2 games, and this is 2 games, actually, when you look at it, is Cars was really successful, took away, it had a certain profile of sales. So when you looked at it and you would have charted the sales, a hit in the video game business or in most businesses has a certain pattern of what it looks like. And when we started to look at the data here and what was being portrayed, at least from some initial data we got from VG Charts and what we got from Amazon and trying to piece this together, when I looked at it, I said, wow, this doesn't look like a hit pattern at all. In fact, it looks like it's going to really underperform. And then the game was out for a while, and then it was going to go to the UK, and we started to see some early intelligence information just on gathering this about from the UK sites that they were already offering markdowns and basically discounts from the game on pre-sales. So you start to build a picture and say to yourself, maybe this is not so good. What effect does that actually have on the company from a revenue perspective? So this is how an investment thesis or a model is put together and how you back it up with data. So this is just an example of pulling data from the web, and make a long story short, for THQ, there was definitely an overhang from Ratatouille, not to say it never really made its numbers. It caused the follow-on effects is that the THQ actually closed 2 studios because any revenue they thought they were going to make up from Ratatouille didn't come through, so it had to affect the whole company picture in that case and allocating capital to other games. So what I would say is that a lot of times in the data and what you pull together, you can build models and you can be pretty, good and get good indicators of that, and then you look at other data. So it's always about pairing data from different sources and look, and once again, the human being coming involved in this and kind of saying, hey, I evaluate this data at this level, it looks pretty good, let's get some more data, and then let's actually make an activity out of that, or take action in the market. So this is the part where, we go through and just say, you got so much information, what do we do? Well, you can create your own custom information piece, as the slide paints. This is, iGoogle, and there are others out there like Net5, Info Engine and stuff like that. But really what you can go out is you can start building your world and having stuff as XML data and feeds and plug that into widgets that you have within a page like this and look at your view of the world. So in this case, this happens to be, we had at Bear, our earnings models were available via RSS, so if you permission as a client, you could get it that way. So I would build a little model, show them the current earnings model. Very quickly, I could have said I only want models from this industry or this sector, and I built my own little heads-up display to basically build this information so I can get my current economics report. So in one place, instead of me hunting and looking for information all the time, is I would build this, and I'd build it for other people, and I have a way to basically have multiple tabs on certain sectors or views of the world that I wanted to have. And this would be my one way of cutting through a lot of the information flow. Another key tool that's out there, as the screen paints, is basically your readers. And I find that I use Google Reader a lot, and one of the things that I do with this and that I enjoy is I have this concept of constantly, I like most people on the internet, as I read something, I'm probably forwarding on hundreds of stories on a regular basis that go on because I see something and I know somebody is interested in that. So what I wound up doing in my reader was creating tags, because in Google what you can do is tags actually become feeds. You can actually create them to be feeds. So in this case, as I'm reading stories and I find stuff that's interesting and applicable, I would go out for myself and the guys in my group and create a whole bunch of tags as I'm reading, which are really tickers in this case, or in some cases topics that we might have been interested in. And then other folks would subscribe that way and be able to read what I was finding on Apple or Adobe or other things, or Amgen or Amazon. And I found that was just an incredible way for me to go through. Now, when I talked to the guys at Google, I was hoping that, at some point they could tickerize a lot of the information that would really make it valuable. But for me, I had to, obviously keep my own little database of tickers. But I found when I was working with folks, it was a great way to kind of organize the information and have it feed to them so that they know that if I was finding something, that they could see it. And by converse, is that if they were finding something, I taught them how to do this so that I could see it, so the group could actually share. So another thing, just what's afforded us, this idea about information, once again, about information. So this is really from IBM Many Eyes, is looking at certain things. And I think what's coming to the forefront that I see a lot and how I view what's going on with equity research and what you can do is the idea of text and text meaning something and actually trying to get shorthand ways of looking and evaluating text. So a lot of times I'll go through and I'll pull an earnings call, and basically come in and apply, in this case, some word metrics to it and figure out, hey, you know, I may not be able to read the whole earnings call, but let me drill in here and see how I want to read this. You know, in this case, I think this was Bed Bath & Beyond, right? And one of the items over there, you know, this was kind of the earnings call probably I think in November before Christmas or October. And you can see Christmas is up there, month's term, you know. So you start looking at it, so you find out, hey, maybe I want to drill in and do some other things. Or in this case, you could do sort of a word tree analysis where you can see every time they mention sales, what are they talking about around sales. I think this is coming more and more to the forefront as we try to figure out how to deal with the information glut, is going through and saying to ourselves, you know, are there shorthand ways that I can scale my time? If I can apply a set, in this case, of filters or dictionaries to interesting terms that I should be looking at, then that's something I may want to do. So my buddy David Lineweber, who runs Berkeley's Center for Innovative Financial Technology, and I always talk about this, is that a lot of guys try to really take this to the nth degree and say they want to use this to plan sentiment and figure out all these things, and they're looking at complex word pairings. And we kind of laugh about this is that sometimes, if anybody's asking, that's IBM Many Eyes. One of the things that David and I always go back is that we have this little joke is that sometimes the simplest words really have the most meaning in some cases. So chances are, and David says this all the time, chances are words like abyss. If you happen to see abyss in an earnings call or in a statement by a company, chances are something bad is really happening. You don't need to get, you know, the modifiers and the adjectives and the nouns all in the right place. Words like abyss, you know, that kind of detail. And there are other simple words that are out there that you can basically do something with like that, where you can create, in a sense, your own little dictionary that you apply, and you can pass some filters through, you know, earnings calls and other things, and say, as a shorthand, wow, you know, if these words appear, that's going to hit my radar, and that's going to be something I really want to go. Yeah, that's Wordle, that I think, in that case, word clouds that are out there as well. But these are the concepts here that I think I'm starting to see, and at least my peers were starting to do, and I see others, is this idea of, you know, shorthand. I think there are some products like Thompson that I saw where, as the earnings call is done, is they have the text as well as the audio, and you can skip and jump so you can hear how somebody said something. So say you're reading an earnings call, you click to a part where they're talking about, you know, in this case, events that are taking place or the actual earnings themselves as they announce the numbers, and really you can get there's a lot of guys out there who sort of into the business intelligence side. They want to hear how a CEO or CFO says something and how they deliver the information. So I find that's all crossing into a new bound of how we look at these things and how we're looking at information, not just as numbers, but the actual information itself. And once again, this is kind of, you know, I think what a lot of us who are into the internet do is we kind of spend a lot of time, especially on the investment side, doing a few things. So we're always in our browser. What you see is, you know, we have, in this case, I have Twitter up and running, and on the other side I have Snacker. And Snacker is one of these really cool applications that's out there that basically acts as almost as it's an Adobe Air application that has feeds that you have on there, and you can set the parameters down so you only want to see things within the last day, but it scrolls like news. So it gives me that kind of news tickerized feeling that I see. You know, so when I look at these things and what's out there, it's pretty cool to me, you know, about how it's changing in a sense, in that there's so much you can do. And you know, one of the things I think is really becoming relevant to a lot of the people that are out there, whether it's on the sell side or the buy side, a lot of these things have a different business model than what we used to expect to in the third-party research side. Some of them are free, and some of them garner, in this case, you know, really an advertising model or an influence model where, you know, you may have a key blogger who has another way that he gets paid, yet he's talking about these industries to provide expertise. He may be doing consulting in this case, and really he's talking about large market events, but he's doing research for pay. Or I see in the case of, you know, something like Seeking Alpha, where really it's bringing the community together, it's bringing, you know, different viewpoints that are out there from people who are market participants. Yet Seeking Alpha's model is obviously advertising revenue, and the folks who are on there also are thinking about advertising revenue as their opinion gets out and as they promote their sites. There are plenty of things that are going on in this space that I think have a direct impact and will have an even more impact on the equity research business just going forward. I mean, when you look at this, once again, is the access to information as it comes, whether it be from a news organization, whether it be from a third-party research provider, an expert, or even a blogger or independent research parties that are out there, they're all using the same tools and technologies, or starting to use that, and finding out how they communicate with their client. And I find that as a great challenge. You know, I've had guys now who've been in this business for a long time say, you know, I'm thinking about, you know, putting an RSS feed together and getting it out to my client base that way. What do you think? Do you think they'll use it? And my suggestion to them is that, you can let them know there's going to be a part of the market that needs to learn and is not used to that, but there's another part of the market that's coming up that's very much used to that in doing that. So, if you think about how this is going with, user-generated content, others that are out there, I think it's a veritable hotbed. I mean, probably out of the ashes of this financial crisis is what we'll find is that, we had a lot of guys from Wall Street who no longer work on Wall Street, have some capital, have interesting ideas, were in the research business or maybe the technology business, and decided that they wanted to really stay in this industry, and they're building applications or they're taking advantage of this, and I think it affords it to them because of the way the Internet is organized and structured. Once again, distribution, content creation, in those cases, the physical methodologies you get are very cheap. That's going to have an effect. That, I think, has a really great effect. So maybe the unintended consequence of really the Wall Street collapse and what we've seen in research and the credit crisis is you've got a whole bunch of interesting guys out there who are able to go independent, and there's somebody who's willing to pay for that content in some way. So at this point I think that's my last slide, is if you guys want to be able to keep submitting questions, I'll stay on, I guess, for as long as we can here and try and take them. So I see a question here is, what business models are out there for analysts? Pretty much you can name them all, right? Some guys are very much into building their own brand and being on CNBC and basically building a client base, and there's other guys who want to go wider in that respect and really go and say, I'm going to go after the retail base and I'm going to do something like a briefing.com or other things where I'm going to, be a wide market participant. And then the other case is that you have premium name analysts that are out there who are basically saying, you know what, I'm leaving my shop. I'm going to go independent. I've got, 20 clients who love me. I'm going to concentrate and be exclusive to those 20 clients, and I'm going to be basically research on demand for them, which is if there's a guy who used to do this basically at Bear Stearns, which is Ed Wolf, who created Wolf Research. He pretty much is a proprietary shop for, I'd say, a handful of clients, and really what he does in this case is that information that he had in his head is now locked up by those 20 some odd clients, and that's a competitive advantage for them, and they feel good and they're willing to do that. So that's one of the models. Obviously, I think, I see from David over here, David Motor, is just First Bank, GLG, and Coleman Research. I think there's definitely capacity for those guys to figure out what they want to do in the research space, is that they already have access to a lot of the experts who are talking to the buy side. So the question is, do they make the leap and offer that ability now for analysts to come in and actually create publications? So one of the things that goes is, if you look at this, is that in equity research, and especially on the client side, there's an accepted level of sort of what you get. You kind of love publications. There's a certain look and feel to it. They're still out there. Is that whatever we think about the internet is, yes, things are still done online and stuff, but really, I don't know if there are any associates or analysts from the buy. I'm sorry, a portfolio manager in this case, to take a look at
Rob? Rob, can you hear me?
future copies and hard contact. So that page, I think, I put it in that slide that.
Hey, Rob, it's Catherine. For some reason, your audio is dropping off.
We're going to get the log in. We're going to get that.
Rob, this is Catherine. Can you hear me? Because I don't know if you can, but your audio is not coming through clearly. We're not picking you up. Perhaps you can reply through the chat window, and we can see if you can hear me. Folks, I want to thank you, everyone. We've lost Rob's audio, and I hope you can all hear me as well. I want to thank you again for joining us today. It was a great presentation. I just want to let you know that, oh good, thanks, I'm glad you can hear me, that we're recording this, so you'll be able to watch it again later. We'll send you an email once it's available. If you save the chat window, the easiest way to do that is to just click in it, to select all, and then copy it. And you can save that as a file, or you can email me and I will have a copy of it available. I don't know if Rob is going to share his slides, since he can't, we can't hear him right now. I don't know, but we'll find out about that, everyone. Oh, there's Rob. I'll ask him, hey Rob, are you willing to share your slides with people on SlideShare or someplace like that? If not, so everyone, we will have a recording available and we'll let you know. So I just want to say thank you, everyone. And Rob, thanks for the great presentation. It was fascinating. And we hope you will join us again soon for another webcast. All righty. Bye-bye, everyone.